US indices have a volatile and somewhat tumultuous week. Before we start, a quick word from our sponsor. This video is brought to you by XNest, the world's leading retail brokerage firm offering ultra-fast execution and no overnight fees. Look for a link in the description below. The Nasdaq 100 initially tried to rally during the trading week only to turn around and show signs of weakness. We have tested the crucial 20,000 level, which of course has a lot of psychology attached to it and is an area that's been somewhat supported for a while. At this juncture, I think that the 21,000 level above still offers significant resistance, and you could even make an argument for a little bit of a double top, but really I think what we've got here is a situation where traders are just simply a little bit tentative ahead of the U.S. election and, of course, maybe a little bit exhausted. We are starting to head towards the Santa Claus rally, although we're probably 3 or 4 weeks away from it. So sooner or later, traders will probably try to look for some type of value. The Dow Jones 30 initially fell during the week, but has recovered enough to at least show signs of life. And in fact, if the markets close the way they look at the moment, we will have formed a hammer. What this tells me isn't necessarily that we're going to become overly bullish. I think it's more along the lines of we are going to go sideways. That does make a certain amount of sense as we hold our breaths and wait to see who wins the U.S. elections, but furthermore, it's a market that got a little ahead of itself. So with all of that being said, I think it makes a certain amount of sense that market participants continue to look at this as a buy on the dip market, as the Federal Reserve could very well cut 25 basis points at the next meeting, at least according to what the market might think. The S&P 500 fell during the week, but it has gotten itself back up off the floor. So I think you've got a situation where traders will continue to look at dips as buying opportunities here as well, as the S&P 500, of course, is one of the first places people put money to work. The 5,650 level is offering support at the moment, just as the 5,900 level is offering significant resistance. It is worth noting that on Friday we did see a bit of a recovery, despite the fact that the jobs number was so horrible. That being said, it's probably worth noting that the jobs number was highly skewed due to the hurricanes in the United States, so perhaps the market is just simply ignoring that. I remain bullish, but I recognize the chances for volatility are pretty high at this point. If you enjoyed the video, give me a thumbs up and subscribe.